MVR.X, Morgan Stanley Retail Index, and here are the names. Abercrombie and Fitch is in here. AutoZone is in here. Been doing extremely well. Whoever thought it would get to $310. But if the Chinese slack up in their purchasing, what a great shirt. We'll be looking to see how overbought that is. But there's Costco in here. Hey, look, there's Family Dollar. There is a high-end Nordstrom's in here out of the Northwest that does well at certain times. Hey, Tiffany does really well at certain times. Okay, the TJX does really well. They all have their story. Walmart, Target, they all have a story based on seasonality in a lot of cases, but safe money, or they want to call it a place to hide out, it's always going to be here. There are great trading opportunities, but as we move throughout the year, we're going to want to take a look at this weekly chart. And once again, we have a major support level here in 2011. Then we had another support level in 2011 that was broke here, and this one was broke below here. We're selling into resistances. We've got, for the first time in a very, 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 very long time, is you've got a 1 week, 2 week, 3 week, 4 week, 5 week closing below the declining blue line, the 10 week. That's the bear. You close below it, and it declines the moving average, weekly declines in price. Any up move in these stocks are to be sold into resistance, as we have said. This is your multi-year 2011 support level that we tested. It was a major resistance level over here of a consolidation level in 2010, and we made all-time highs. Well, they did well. They did well, and even on the counter trends at times, 4 week rally up to the double top, and the kiss goodbye and the lower lows that went along with it, and we called it too. In fact, we were shorting just about everything we could up here. So now that we have put a bottom, we're in a range, and every bottom, multi-year bottom, has a range to it. So we are short-term finally got a weekly sell signal on this retail index. You have to go back to last year. And last year's sales signal in 2010 was right here. The last time we had this was a big, big weekly sales signal. It started here. We have a weekly sales signal. We haven't even had that weekly sales signal, for crying out loud. That thing was breaking higher. That weekly buy signal was going with it. So was the percent DS. So was everything else. That's a standard indicator that lags price. Made great highs. You haven't had a 3 week sell signal here. The sell signal is deeper than the 2010 one. Yes, you're holding support up here, but it's a bear trend, not a bull trend. And every bear trend to resistance is to be sold short. And we got earnings coming, and not only that, when we start getting into the back to school, that's what this Labor Day is about. And then, of course, you know, people are already selling Halloween candy. Imagine that. Summer's over. And we have a major support level here in this retail sector. And if we break it, that means that the consumer is bad. That means the economy is weaker. We already know that it is weak. Discretionary income has a tendency of pulling back at these retailers, but the retailers are very crafty at merchandising, and they're very, very good at displaying and advertising. And there will be, if we're gonna, margins on the earnings are going to be lower, because if they're competing for that consumer dollar, their consumer does well when there are price wars, because we can go buy things at a lower price, at a lower wholesale price for things that we need, such as Christmas gifts and such as other things around the house and things that we need. We can get it, and we can get more bang for our money. But the profit margins on the top line and bottom line to the discount mechanism to the consumer would show that if we are weakening with the consumer, that means that the October earnings season in the retail sector could be in for a great surprise. I can just tell you that it is weak. I can tell you that we're in a weekly sell signal. It's going to take a period of time. We will pick the leadership stocks out here to trade on an intraday level and a weekly level. The ones that you can take advantage of, the ones that perform well in this environment, and the ones that don't perform well would be the ones you would short, and the ones that perform well you would be long. You would diversify the risk management between the long and the shorts based on the individually publicly traded company. It's in a bear trend right now. The next support level, like the retail, it's never come down to see its 200 week. It's got all the support level right here coming down. where the breakouts were. And right now the resistance levels are going to be any up move. They're selling those names. Bear cycle retail.